This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Well, hello, this is Hall Martin with Investor Connect. Today we're here with John McEvoy, managing partner at Tribeca Early Stage Partners. Tribeca ESP is an early stage venture group primarily focused on pre-A and A-stage companies in fintech. With over 60 partners in their group, they have an expansive network which they use to help their portfolio companies in every way possible. John, thank you for joining us.
Great, Hal. Thanks to be here.
Great. And so what was your background before investing in early stage companies?
Sure. So as we already mentioned, I'm a Texas Longhorn. So I grew up in Texas, but grew up on the institutional side of finance here in New York at Bankers Trust, Deutsche Bank, primarily, and on the derivative institutional side of the business. And then in 1999, I left Deutsche Bank to start my first company. So since 99, I've been involved as founder or co-founder of 3 companies, mostly in kind of the finance and technology space. And that's been a great ride. And then I started Tribeca ESP in 2014.
Great. So what excites you right now?
Well, the whole fintech space is super exciting. Just the amount of innovation that's going on is incredible. The speed at which things are happening, the rate at which technology can be built these days versus, when I started my first company in 1999, it was Oracle servers and things like that. And the clouds were just things that, hid the sun. So the innovation that's happening in finance is remarkable. In the institutional space, you have tons of legacy technology that really needs to be replaced. You have balance sheet issues where the large financial institutions are trying to reduce their balance sheet in a variety of ways. You have a whole host of upstarts in the fintech space that are, in some cases, challenging outright business models of traditional financial institutions, and in other ways, looking to partner with those institutions. So there's just a lot going on. It's a super exciting time to be in fintech.
Well, great. So you see a lot of startups and a lot of investors in the fintech space. What's your advice for people investing in startups in the fintech sector? What do you tell them to do before they write that check?
Yeah, so we are on the institutional side of fintech primarily, which means we tend not to do consumer-facing businesses. We are generally looking at companies that are selling into large financial institutions. So certainly in our world, having that domain expertise as an investor is highly important because these are intricate markets with great nuance, and you probably only understand it if you've been there. So one of the great things about our network with about 60 people, average amount of experience in finance is probably 30 years. And a lot of people, ran major businesses at a lot of large institutions. We have a whole bunch of entrepreneurs as well. So we understand what it's like to sit in those seats of being an entrepreneur. But it's really important as an investor to have the background in this space. Otherwise, you just simply won't understand it. You might think you do, but you just won't understand what these companies are actually doing. And the nuance you'll miss it and it'll cost you.
Mm. Great. And then on the other side of that table, what do you tell startups in this sector to do before they go out to raise funding?
Yeah, it's kind of the same advice. Know your market. So, a lot of the companies that we see are not young people right out of business school, for example, or even undergrad, because the space is one where you have to really understand the problem to be able to attack the problem. So for people who are potentially being entrepreneurs, again, and primarily the institutional side of the business, I would say make sure you understand your market. Work in a bank for a while, work in a large financial institution for a while, work in a fintech startup even. That will give you a great perspective on these financial markets. So it's really background and domain knowledge would be my main points.
Right. And then, so let's talk about the state of investing in fintech. How do you see the industry evolving from here?
Well, deals are getting done more quickly, that's for sure. And the size of these early stage rounds is growing. The speed, as I said, is challenging sometimes because we have to make decisions in a shorter time frame than we had to make 1 or 2 years ago. And also, that has to do with the amount of money chasing the space. So when I think about what's evolving, you've seen certainly some very large seed funds, early stage funds get printed even in the last several months of I saw a $400 million seed fund, a $500 million seed fund. The stage that these people are investing, so let's say you have a $500 million fund, the round size might be only a couple million in seed. So you got to do a lot of deals, and that just means there's a lot more money chasing maybe the same amount or maybe a growing number of deals. But I see it evolving because there's just a lot more money chasing deals, and we have to be faster, and everybody else does too. It's a great time to be an entrepreneur.
Great. And so what do you think is the biggest change we'll see in, say, the next 12 to 24 months in this space?
Next 12 to 24 months. That one I don't really have an answer for. It's tough to predict, but my gut tells me that valuations will continue to be pushed. That's certainly the environment that we're seeing now. Multiples on if companies have revenue, multiples if they don't have revenue, then just higher valuations early on.
Where do you see DeFi, decentralized finance, coming in at this point? Or when do you think that's going to come in and be a big player?
Yeah, I think it already is. We've looked at a lot of things in the space. There's within institutional finance, within, let's call it fintech, and really what our world is, we would put crypto and blockchain and DeFi all in that. There are already a lot of deals coming our way, and we have the expertise in our group to evaluate those types of opportunities. So I think it's going to become increasingly important. People are calling it Web 3.0. We will continue to look at deals in the space, and we hope we find something that isn't too expensive because we've seen a large number, and the ones that we were most interested in, we just couldn't get comfortable with the valuations.
Great. And so tell us more about your investment thesis for your fund. What exactly is your criteria?
Yeah, so we are looking for, let's call it late seed to Series A investments. And, there's 6 or 7 key spaces that matter to us in fintech, which would be payments, wealth management, capital markets, infrastructure, and technology within capital markets, and lending would probably be the biggest. And then crypto, blockchain is something we want. As I said, we'd love to see more and do something there. So those are the biggest pieces of the pie. So we're looking at things throughout that space, and we have the team to evaluate those things. I think from a more granular evaluation of a company, we're really looking for entrepreneurs, as I mentioned before, that have the right domain knowledge and understand the problem, understand the ecosystem, because they're going to run into problems and they're going to run into roadblocks. And if they don't understand their ecosystem, they're not going to find their way out. So every good entrepreneur I've ever seen or known knows their market really well. And when they face those problems, they know how to address it because they really understand their ecosystem.
Great. Can you mention 1 or 2 startups that maybe fit that thesis?
Sure. So we're in a company called Genesis. Genesis is a low-code, no-code platform selling into the capital markets space. They did their Series B earlier this year, led by Excel and Google Ventures. So that's a super topical company because they're dramatically accelerating the build within large financial institutions like Citibank, who's a known client of theirs, and a strong handful of others. They're reducing the build time to put new applications in place for traders and bankers and back office by 4x to 10x in terms of time frame. So that's a super neat company. There's a company in the insurtech space called Blueprint Title that we love what they're doing because they're completely disrupting the way title insurance is written today at a dramatically lower price and a different business model while still participating in the traditional title insurance market. So those are 2 really exciting examples in our portfolio. One more I'll just add is a company called Alloy, which is in the KYC AML space. They had a press release yesterday. They just raised at a $1.35 billion valuation. So it's a unicorn, which of course we love to see in our portfolio, and a great company with great leadership that's been able to really take advantage of this huge, quick shift to everything digital accelerated by the pandemic, of course.
Great. Well, you've talked about the need to know the market and the challenge of regulatory, but aside from those, what is the challenge fintech startups face in today's market?
I think the biggest thing that many of them still don't appreciate at the early stage is the length of the sales cycle. So the sales cycle, when you're selling into JP Morgan and Goldman and Citibank, is really long. And you might have a multi-year sales cycle depending on what your product is. We have plenty of companies who will say, yeah, we've been talking to them for 2.5 years and they finally signed a contract. And it's not because these institutions are necessarily slow moving. It's just that it's very intricate. The technology stack is very intricate, and there is a lot of constituents within the institutions that need to be heard from before they make a major move in technology. So I'd say the sales cycle is probably the biggest barrier in our space for early stage companies. And also part of that is that there's a credibility aspect that these companies need to have before somebody will take them on as a vendor. So, a large bank might say, hey, we love what you're doing, but are you going to be around 2 years from now? What's your funding? Who are your investors? So those are constant issues that we hear constantly from our startups, and we certainly try to help in a wide variety of ways.
Right. Then what's the challenge investors face in the fintech startup space these days?
It goes back to the things I was saying before. Valuations are really dramatically different than they were a year and 2 years ago. So that's a big challenge. Of course, you're always looking for good talent and people that understand their market, as I've said, and people who can be evangelistic without being dogmatic. And I make that distinction because, I think a founder needs to be really evangelistic about their product and who they are and what they can do to help their clients. But at the same time, if they're dogmatic to the point where they're inflexible and not willing to adapt to their market, it's a fine line. You can't be too stuck in your ways, and you've got to believe in what you're doing, but you can't be too stuck in your ways.
Great. Well, you mentioned several areas that you're focused on: payments, capital markets, lending, and so forth. If you had to pick one or two sectors out there or subsectors in the fintech space that are really good opportunities today to pursue, what would you call out?
I would call it capital markets. And I would put kind of data right there as well, because it influences so much of what's happening in that space. The capital markets space is something that for us is a great opportunity because we've all been operators. Our group of 60 odd people, most have been operators in that space. So we understand it really well as investors, and we have the network to be able to help companies who are trying to sell into that space. So for us, if there's a subsector focus within fintech, I would probably say capital markets. We have expertise in other areas as well, for sure. But capital markets is interesting because not that many venture firms truly understand it.
Great. Well, in the last few minutes that we have here, what else should we cover that we haven't?
I guess I would mention the business model of Tribeca Early Stage Partners. We're a little unique in that we have a syndicate model. We are not a fund, but we have a very highly engaged syndicate. So it's not like a venture firm with a bunch of VCs, a bunch of LPs, sorry. It's really a network of a cultural connection between the group, people who want to work together, people that want to help companies that we invest in, people who are happy to engage either the investment process as we're evaluating opportunities, or once we've made an investment, people who are really willing to help these early stage companies. So we are entrepreneurs, we are operators, we have domain expertise, and we really are here to be whatever to be and fulfill whatever is needed from our companies, and we're not intrusive about it at all. We love to be invited into the equation, and we help in a wide variety of ways. We're, I think, a really unique model in the venture space.
It is, yes. And thanks for sharing that with us today. So how best for listeners to get back in touch with you?
Yeah, the easiest way is to go to our website, tribecaesp.com, and or send an email. It's on the website as well, but info@tribecaesp.com.
Great. We'll include those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
That was great, Hal. I really appreciate the time. Thank you.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.